Great. Well, welcome to another Finance Club podcast. Here we are with Jehan Chu, who's the general partner and founder of Kenetic. He's also a general partner in other VCs. He's seeded over, he's invested in a number over 100 crypto companies, and he's seeded about 16 crypto VCs. I'll let him introduce himself, and also as co-hosts or hosts, we have Billy Naveed from Smile Group and Srikesh. So Jehan, perhaps you want to introduce yourself and let's have it as interactive as possible. And if the audience want to write any questions that they might have in the chat, and we'll have them answered.
Yeah, great. Thanks again for having me, Arun. Really a pleasure to kind of be back here. So for those of you that don't know me, I'm Jehan Chu. I'm the founder of Kenetic. Kenetic is the first blockchain VC in Hong Kong. My background is I was a front-end developer during the first dot-com boom and worked for Sotheby's Auction House in technology for many years before they moved me to Hong Kong, and I switched over to be the head of client development for the APAC region before leaving in kind of 2008 to become an art advisor. So I have a very firm and long history in contemporary art. Around 2013, I personally got into Bitcoin and started investing. I started the Ethereum community in Hong Kong and ran the meetup starting in 2014. And it's been a very long run since then. I started Kenetic in 2016, and again, we were the first blockchain VC in Hong Kong, but probably maybe one of the second or third in all of Asia. We've done over 240 company investments in our history. We're seed investors in things like Parity, which is the parent company of Polkadot. Polkadot, obviously, we participated in the Ethereum crowd sale, FTX, Solana, Decentraland, Blockdaemon, Alchemy, BlockFi. We were seed investors in really some of the largest and most kind of successful companies, and some of the most unsuccessful companies considering BlockFi now. It's been a very long journey, and we've been super fortunate, returns aside, to have seen some of the best founders evolve over the course of multiple, different market cycles, multiple technology cycles within kind of blockchain and crypto, whether it was the rise of NFTs or metaverse or DeFi or GameFi. We saw like the whole phase of kind of enterprise and DLT kind of come and arguably go. We've been able to just kind of witness a lot of this stuff. We ourselves are not a fund, although most people think of us as a fund. We're more of a family office. We don't have outside capital, so we're always investing just our own funds and recycling those. In addition to that, in the past year, we have started to back crypto funds and blockchain funds. So the first one that we co-founded, we're co-GPs in a fund called Nural, Nural .capital, Nural Capital, which is led by a woman named Rabia Iqbal. She's a Pakistani American, and it's a female-led LP. So it's crypto. We call it a fund. We call it a hybrid fund. It's a fund of funds, really. So it's 2/3 funds and then 1/3 directs. So it has kind of exposure to both. And we're investors in things like Polychain and Shima Capital and Block Tower, Spermion, and some really, really great funds. But then we're also investors in direct deals like Yuga Labs, Snickerdoodle, Credo, Aptos, and a few others. So really interesting. We also backed a fund called Kestrel 0x1, which is a small blockchain and crypto fund started by 3 Palantir employees, 2 of whom are still at Palantir. So this fund really focuses on like data and scalability in the Web3 space. And then finally, something a bit more closer to home for you guys who are in Dubai, we partnered with a company called a firm called Venture Souk, who is the largest angel network in Dubai, certainly maybe the Middle East. So we're one of the founders. Sonia Weimuller is my Kaufman Fellows colleague, and we're very close. And so we decided to put a token fund together. So we advise them on investments basically, but we co-founded the platform together, and that's a pure cryptocurrency fund investing in early stage pure token projects. So that's a really good one. And so that's mostly what we do. And then otherwise, we're just kind of investing on our own. We also incubate companies. So we've incubated companies like Ioconic, which I mentioned earlier, bringing brands in the Web3 space. We're also incubating a growth company in crypto, a couple art companies. And then I'll spend more time on this later. But we're also incubating something called Neptune Digital, which runs Wuhan Chain, which is basically the quasi-official version of Ethereum that is completely compliant to operate and grow inside of China. So we'll come back to that later because it's a much larger conversation. So yeah, that's kind of my kind of short intro. Maybe I'll just start off. Arun, I don't know if you have any kind of questions that want to prompt me off, but I can just give you kind of my general overview first, and then we can go into any questions you have, Arun, and then we can open it up to the floor. Does that sound good?
Sure. Well, I mean, Billy and Srikesh will be leading it from now, so they'll direct it to them.
Okay, cool. Well, maybe you guys can introduce yourselves
first. Yeah, so hi, Jehan. Good to actually be interviewing you in person. I don't know if you know, when we last spoke on this channel, you were actually, the first time I actually saw you was at the UBS conference in 2016. You came up on stage, huge amounts of energy. And it was like the reaction from the crowd was, and from me was, wow, that was the best talk we've heard this time. We don't understand it, but what he said sounded like it needed to be actioned and was very important, right? So that's when I kind of got into crypto, I think, from that talk, just from your energy and what you said from that. So it's interesting interviewing you here. So, obviously crypto's come a long way. And just on my background for the audience that don't know, I used to be head of trading at Credit Suisse in India. Before that, head of block trading at UBS in India, and then a regional sales trader before that. And I've also been investing and trading in crypto for the last 3 or 4 years. So where I wanted to start, kind of the audience is quite general, as you know, from the Finance Club, right? So I want to sort of, start high level macro. Just start a high level macro. Hang on, I think my video is frozen. Got the time. Can you hear me?
Yeah. Yep. Yeah, we can hear you. We can hear you, but your
video will come. Yeah, my
that's okay. That's okay.
Yeah, no worries. Right, look, so I just wanted to start start with $1 million question, right? Which probably a lot of people want to hear the answer to. You being an insider and an expert on the space, in your opinion, how far does the decline in Bitcoin and crypto in general have to go? Or do you think a bottom is in or a low is near? We start there.
Yeah, bottom's definitely not in. I think we could, worst case scenario, we could flash crash down to sub 10K Bitcoin, maybe even 5. But that would be like a very, very short, again, like a flash crash, maybe kind of due to like rolling liquidations, depending on kind of where the market is. But obviously the market is very bullish right now. I think we could definitely see like $200 or $300 ETH. But again, I think that would quickly be kind of pushed back up to kind of more reasonable levels as people who are kind of sitting on the sidelines with cash and who are still taking kind of long-term positions would be using that as a buying opportunity. So if I were for myself, I would say, this is not investment advice. I would be setting levels on exchange and just setting limit orders in case there is a flash crash and kind of pick up kind of cheap coins that way. But overall, I think that everything seems to be governed right now by kind of like the macro economy. And I'm not an economist and I'm not really a macro guy. But at a very high level, I think that there's not really many kind of financial catalysts that can kind of jolt the crypto market out of its kind of doldrums right now. Obviously, overall sentiment is kind of just poor, interest rates, yada, 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 supply chain, other shoes dropping potentially with COVID, everything really is not pointing in a good direction. And for what it's worth, it seems like the crypto market is still primarily sustained by, kind of trading activity, arguably like speculative activity, and wholesale utility and value for kind of the capital that's in doesn't really justify a lot of the kind of valuations that we see in the crypto crypto market cap size. So for example, if you take maybe not the top 10 coins, but maybe like top 50 outside of the top 10, and you look at how many of these projects are actually like pure utility coins, is there enough actual utility and customer value, things that people are willing to pay for, to justify the types of valuations that these crypto market caps have? No, not really. There's just a mismatch, you know, and a lot of the crypto projects are still very optimistic and aspirational in terms of the value that they actually provide compared to their Web 2 counterparties. So, you know, Web 2 companies with, you know, unicorn valuations arguably have more fundamental value being created, and people are literally using the service. They have revenue which is based on services provided. Sorry about that, hold on one second. Most kind of Web3 companies just don't have that. Like, they don't actually have millions, much less hundreds of thousands of paying customers. And so that's just like a very fundamental thing that I believe will come, but has not come yet. I also think that we might take a detour in terms of pure decentralized, you know, kind of business models and revenue. And we'll come back to that when we talk about, you know, hybrid kind of paradigms of centralization and decentralization. But no, I think the bottom is not in. I think we go lower. And I think we're kind of, you know, sideways and down for the next 6 to 12 months. I think until the macro situation changes, we won't really see a significant return to kind of previous levels.
Yeah, no, agreed. Thanks very much for that very candid answer, right? There are a lot of people.
And to be fair, like, I see all of this as like a long-term believer and, you know, investor. Like, we're still investing in the space. So that's more of like how I see the kind of short to medium term. But I still very much believe in the technology and the business models and the founders and the whole industry. It's very clear that's stronger than ever. So the flip side of that is the market caps will go down, valuations will go down, but actually the fundamental value is still ticking up. And it's making strides and it's getting more stable. Mind share is at an all-time high. You know, kind of enterprise and even sovereign buy-in is at an all-time high and continues to get stronger and stronger. People ask me what's the difference between 2018 and today in terms of crashes. The biggest difference is that very few people are leaving the industry now. In 2018, it was existential, where people who, you know, went through the kind of bull and then bear, many people left. I'll give you a point of information. You know, I know companies that, you know, laid off like 60% of their staff in the last, in 2018, end of 2018, and almost none of them stayed in crypto after that. They went back to the banks. This time around, everybody who's migrated over from traditional TradFi or other trad industries to come to blockchain and crypto, they're still staying in the industry. They're not fleeing. And so we see that there's crystallization, not just in the kind of, you know, the value, but also in terms of the mind share, the commitment, the understanding to the industry. Okay,
no, I appreciate the candid answer. You've actually answered a few of my questions already. I want to go into the next type of question. Look, having you online and just talking to everybody would, you know, be very useful if you'd give us some color and perspective on from you and other crypto insiders were thinking as you saw the failure of Terra, 3 Arrows Capital, and Celsius, and now also Voyager. I mean, what were you guys thinking when all this was happening? Were you expecting it? You know, what was the kind of internal dialogue between the whales and the insiders when all this was going on?
Yeah, I mean, we're seed investors in Terra. So, you know, we have, I wouldn't say that we have any inside information on that, because that investment was made a very long time ago. And you know, for better or for worse, you know, we had already exited the majority of our position, you know, when this happened. And that actually wasn't intentional. It just so happened that we, you know, were kind of selling over time. I think we were selling over the course of like a year. So it was a very long time that we were selling. That said, we still, like everybody else, took a hit on it. I think that it definitely caught us by surprise. The kind of violent unwinding and, you know, the wholesale kind of collapse of their ecosystem, it just shows, how it shows kind of the double-edged sword of, I would say, tightly wound interoperability and instantaneous capital and functional response to market changes and liquidity changes. This type of kind of unwinding, I think, would be impossible in the traditional markets. But because so much capital was just, recursively committed to different DeFi across different asset classes, different liquidity pools, those unwound so quickly, almost instantaneously, because that's what they're designed to do. Obviously, the design overall of kind of Terra and Anchor was flawed. It couldn't handle this type of stress test. And yeah, no, it caught everybody by surprise. And I don't, there were some people who were kind of railing against over time, and more power to them. But I think the majority of investors, us included, really thought that the model would kind of hold up and that it was more steady than this. And then, of course, nobody really saw the knock-on effects, the second order and third order effects. We're still seeing third order effects. Recently we had kind of calls, investor calls with BlockFi, just talking about the aftermath and of course what's been publicly announced about the FTX deal. And it's amazing how much maturation the crypto industry, even the institutional side of crypto industry, has to go in order to really be world class. And that's not to say that TradFi is immune or TradFi is perfect. I just think that TradFi has probably internalized a lot more of this kind of carnage. And for the crypto, we probably feel it worse, and the media reports it worse, because this is really, only the first or second time that we've seen like wholesale collapse. But obviously, wholesale collapse is definitely possible, as we saw with GFC. So in some ways, it's new to us. In some ways, it shows our youth as an industry. It's a harbinger for kind of things like regulation and kind of more careful consideration of risk management. I think that's kind of the watchword. That's the biggest learning coming out of this, like more rigorous risk management. But yeah, I mean, I would say that the catalyst and the kind of ripple effects were completely unpredicted.
Okay. All right, it's my last area of questioning, right? Then I'll hand over to Billy for a few questions, right? Look, you've invested in a lot of crypto VC funds, right? And obviously a lot of those funds must be, let's just say, underwater at the moment, right? What are those managers advising clients to do? If there's a generalization, or you want to go into specifics, or, what are those managers advising clients to do?
Yeah, interestingly, so most of my kind of information is, and either comes from our investments via Nural Capital, the fund of funds, the hybrid fund, or just through kind of talking to my friends who are managers. Actually, everybody's very bullish. Everybody wishes that they had, kind of those who are at liquid funds wishes that they were kind of smarter about their trading or had more capital on the side. Obviously, high watermarks are going to be pretty difficult to get back to. So I think some funds will go under because of that. Or they won't raise a new fund. But the VC funds, I think, generally are doing well because a lot of those who raised, so a lot of the funds that we invested in, we started investing with Nural back in Q4 and Q1. And all of those funds that closed during that time are incredibly well positioned because they're cashed up. They haven't really deployed a lot. And now they're kind of going into the market with, discount prices. And a lot of flexibility and a lot of leverage to kind of deploy. So I think that it's a great time to be, investing in funds because the funds that raised during that time are in the best position. Now, how do you get into those funds? Most of them are closed already because they closed capital. Obviously, I'm talking my book here, but Nural would be a way because we're still raising and we have exposure to all these kind of vintages. But even now, I mean, I think that if you can find good managers, it's a great time. And the managers themselves are saying the same thing. This is probably one of the best and most advantageous times to go into the market. again, for all the reasons I said before, the technology is becoming so mature. The business models still need to kind of mature. But I think that the hybrid side of things, we have a thesis that the future is not fully decentralized, that it's actually a mix of centralization and decentralization, and that decentralization and especially decentralized dApps and tools, there will be layers. There will be layers of decentralization inside of centralized organizations. So a bank will have like a decentralized, financial instrument, a decentralized kind of like loan on the back end, and the front end, you'll never see it. You'll never know that it's decentralized. You'll never know that you're getting, kind of advantageous rates, because actually on the back end, they're taking advantage of a much larger pool of capital that's, kind of crowdfunded, but is also regulated, is also KYC'd, also has customer service, and also has banks brand on top. Like, that's how we see the future, not just in finance, but across all areas of kind of Web3. And that's what we think we'll really start to see true emergence of wide-scale retail and consumer adoption in the space when these large enterprises start to use selectively Web3 technology.
Cool, great, thanks, Jehan. I'm going to hand over to Billy for his questions. Billy?
Thanks, Rick. Hey, Jehan. So I've been tasked with playing devil's advocate, which is hard because I'm such a constructive on the space, but let me humor me for a second. So, one observation I would make, right, and it is, I think you're right in many ways, in that there's so many more players involved in this bull run, and institutions and retail, etc. But one thing I would say that is very different to the 2017 bull run was, during that time when people lost money, they kind of lost it with one eye open, right? They were investing in shit coins and ICOs, and it was like, these things either were 50, 100x's, or there were zeros, and sometimes they were both, right, very quickly. And so kind of like it was a bit of almost like a casino. The difference, I think, that's happened now is that there was this belief, and the industry had grown up, had matured. And if you look at the websites of some of the names that you'd invested in, some of the names that we invested in, very similar companies, right? We were, we're investors in BlockFi competitors. Especially on the asset management side, they describe themselves as the new age bank, right? They talked about risk management multiple times across websites. People introduced the word stable coin and used that word very, very specifically to kind of indicate that things were stable, right? And that we'd moved on from this Wild West. And people actually went from putting risk capital to actually putting their savings. And I'm sure you saw after the Terra collapse and after Celsius and Voyager now, Twitter is full of people not having lost the money they would have punted on, kind of Amazon, but genuinely life savings. And these are, I'd say, leading edge believers that have been totally burnt and carried out in this process. So firstly, do you agree with the fact that it is different a bit this time around? And how do we as an industry go about rebuilding that trust outside of just waiting for Gensler to come and regulate the living hell out of us?
Yeah, it's a great question. I mean, I think I'm of two minds, right? I think I touched on a little bit before about like utility. I think trust. I would argue that kind of phase one and phase two was like, phase one was like, let's call it whatever, 2009 into like 2018 or something, 17, 18. That was more hope, right? There's a bit of trust, but mostly hope. And then kind of 2018 to 2022, it's a bit of hope and a bit of trust, because we saw more kind of more build and more maturation and more a diversification and a broadening of the kind of user base and the investor base and just everything. But I think that phase three, which is, let's call it 2022 and beyond, really just needs to be all kind of like fact-based and results-based and utility-based. Like it's value-based. That really has to be the next phase of blockchain and Web3. Of course, people are always going to be coming back to the casino. That won't change until regulation deems it impossible to keep speculating on these assets. But I think every time we go through one of these waves, you have this kind of massive retail speculative wave, which eventually kind of crests and then crashes. And then what you have left is, a lot of fundamental investments in the technology and the industry. And that's the same now. I mean, again, just like I said, a lot of people are left. They're still here. They're still building. So, I think that I actually think the industry is in good shape. The market is in terrible shape, but the industry is actually quite solid. And I think it's only becoming more so. And as the industry becomes more mainstreamed, i.e. more hybrid, i.e. more Web 2 companies and TradX professionals coming into the space, the more stable it will become. The less decentralized it will become also is kind of our thesis. But I think, there's no rebuilding trust. It's just proving value. Like, that's it. Like, be useful. And,
Where are those areas that you think, or what projects, or where the areas are useful? So maybe I'll give you an example of one of the things that we thought was finally there's a real use case of where we're seeing some really interesting things coming out, was gaming, right? So, Axie Infinity, I think at peak had almost $100 million of revenue in a month. And it was entirely logical that one should and will want to own your own NFT assets. So gaming is an obvious use case. We saw, I think, peak DAUs there, over 1 million users. Like, this is it. We found it. We found the big use case for NFTs. And then last month, I think Axie did $11,000. And so this use case was really wrapped up in effectively what was speculative demand supply. So where do you see today the use case, or where do you see it being built that we should focus on?
Yeah, I think that you're right. I think the kind of GameFi has followed the same kind of arc as everything else, right? There was a lot of hype. There was a lot of people speculating. It looked like, if you squinted your eyes, it looked like value, but it wasn't really value. It was still speculation and hope. But, now that that's kind of crashed, what do you have left? Well, actually a lot. You have potential business models for kind of digital assets. You have digital asset penetration and mind share at the highest levels of gaming, right? Like, every single gaming company is either considering or has taken a view on how they think about NFTs. Like supposedly like Square Enix is coming into this space like later this year. And so that's the long-term value and the long-term kind of disruption that happens when you have waves of kind of speculation that are, based in actual, fundamental value. So business models are changing, and that's the legacy of the last kind of bull run for GameFi. We're investors in Forte, which is like a $3.5 billion company whose last round was led by C. They do, game infrastructure for games, for NFTs and metaverse, and they're doing great. They have millions and millions of wallets. You probably don't really hear about them because they're B2B. We have super interesting open IP models like what Yuga is doing, right, with Bored Apes, where you have different types of kind of combined open IP / asset-based economies that are just getting started. And I think, these are super interesting models that will continue. There will still be, again, maturation of the kind of play to earn or play and earn model. But I think that the initial foundation has been set. And the fact that so many people tried to copy the play to earn model, it's just odds, right? Some of them are going to stumble upon learnings and rules and ideas that will stick and actually provide value. I don't think we're there yet. I think that most of the play to earn model is quite flawed. But I think that there's still a lot of value there. It's just that we need to refine that. And I think the next version of kind of play to earn won't be able to easily rely on speculation, and they'll actually have to provide value to the users. And I think it's awesome that so many gaming people hate NFTs, that are violently against it. And we see it across the NFT space. That's good. That's good for the industry, because the only way you can win over these people who are skeptical is to actually make them an offer that they can't refuse. Give them so much value for this ecosystem and for the technology and for the asset that they have no choice but to accept it. And that's the, that's the kind of goal.
I'll ask one more question, and then Shrika, I'll hand it back to you. I guess as we kind of look at this industry, and I'm from, as you know, a traditional finance world, and I've looked at lots and lots of different valuation frameworks to try to figure out how you value companies in the sector, and quite frankly failed, right? And most of the time you just kind of end up doing a comparison analysis. When we looked at the BlockFi last round, or we look at even Coinbase today in public markets, and then you look all the way down to something like a Solana, right? So the entire spectrum of different assets in this market. One of the things that I think has really struck us has been just the hyper reflexivity of values that are happening here, right? Like when things are great, these things look super cheap, and they look like even $1 trillion is too cheap. And when things are bad, even a $10 million valuation is too expensive. How have you guys evolved your valuation framework through this last couple of years, and what do you think as investors, in this group, how can we simply have a valuation framework that makes sense going forward?
Yeah, it's a great question. I mean, there's a couple of things packed into there, right? So first of all, you have to separate equity from tokens. And so from the harder part is to figure out like valuations of tokens, right? Because highly liquid, there's so many different dynamics underneath the surface, like who's locked up, what's the distribution schedule, who owns what, that it's really hard to place like valuations. I would say that valuations across the board in kind of, are way overvalued, but that's only measuring it against true like utility, right? Solana right now, and we're seed investors in Solana, so, we're big fans, but they have a $12.5 billion market cap at the moment. And so, take like a Web2 company that has a similar valuation and, look at things like user counts, revenue, et cetera. Now, obviously, it's not a perfect comparison because, Solana's not, I mean, arguably Solana's kind of like you could call them like a SaaS company in a way, with, the kind of payments being gas, maybe. But, there's no way that they're generating that much value. As great as they are, there's simply not that amount of value that's being generated from this ecosystem. And so I think that that's one way to look at it. But at the same time, because they're so subject to, you essentially have like relatively early stage companies that are in the public market that are completely liquid and that have high retail kind of participation. So you actually can't really look at the quote unquote stock price or the token price to get an accurate view on the true value of the ecosystem, because there's too many factors. So I would say really in this next phase, it's important to really look at fundamentals and to go back to fundamentals of investing. Just because it's a token doesn't mean that it has like some special, extra value other than liquidity. Maybe there's a liquidity premium, you can say. Maybe there's a transparency premium, you could say, because there's more transparency in a way. But at the end of the day, like who's using it? How many people are using it? There's a reason why Solana is launching a phone, right? Because they want to try and reach retail. I think that's really one of the kind of key things that we need to look at for these companies. And then so that brings us back to how to kind of evaluate valuations for equity and for venture. And for us, we haven't really changed how we, value companies, except that, maybe you take like, you take a haircut based on kind of where the market is and you try to get in at better prices. But the entire industry is still very much at the kind of early stage. Even though companies have $12 billion valuations, the technology in the industry is still early stage compared to like, how long it took for Web 2 to mature. And so I think that when you're looking at valuations, like you have to just remember, regardless of the valuation, it's still kind of an early stage industry. And so what that means is that you're still very much betting on things like, founders, the technology, obviously, product market fit, and use those to really guide you about what is the value and what's the opportunity versus the kind of risk. And I do think that just because you have liquidity doesn't mean you should exercise it. I think that if you're investing in tokens, like you should still have, like a 5+ year mindset. And maybe that's different than how we used to think about tokens, where you go in, like, let's say that you're not even in the SAFT round, like you're not even the pre-seed round or the seed round. You go in buying tokens off the secondary market or publicly listed tokens, you should still have like a 5-year, kind of outlook on this, unless you're a trader, in which case we're not talking about investment anymore, we're just talking about trading. So if you're buying tokens, I think that you should have a venture mindset, an early stage venture mindset, and strap in for the 5 to 7 year term, and be able to weather what will inevitably see kind of more kind of downturns and bull cycles, and just be committed for that length of time. Otherwise, it's still relatively kind of like catching knives, and I think that type of sharp focus and kind of sharp emphasis on real value and utility and fundamentals will force people to make better decisions and less speculative decisions.
Got it. Thanks, Jehan. Srik, over to you.
Yeah. I mean, for what it's worth on crypto, the way I see it, right, I think the key to it is catching these cycles, because the cycle on the upswing, there's no wealth creation like it, right? But it's a key of catching those cycles, right? And to try and avoid the downdraft, right? Because even if you've got long-term holdings, right, unless they're locked up away from you, the temptation to sell them when they get absolutely, and the temptation to sell the bottom is in sort of human nature. So, I think this thing about timing the cycles and keeping an eye on the cycles is, I think, key to being successful in crypto at the moment, and even doing the sub themes as well. Just my kind of view from a trading perspective. And when I've spoken to family offices about this as well, it's kind of what I tell them. They're very skeptical about crypto, but they can see the returns. For them, the key is to try and catch the cycles. All right, that's just my thoughts on it anyway. I'm just going to go to a few of the questions on the chat, right?
Actually, so if you don't mind, just before you go to questions, I do want to cover off this. I do want to go a little bit further in the kind of China side, because I do think that that's one area I'm quite interested in. And as we're talking about like what's next, I just want to make sure that we spend time on this. So we're investors in something called Red Date Technologies. Red Date is the kind of visionary and architect behind something called the BSN. BSN stands for Blockchain-Based Services Network. And to us, like, this is the most important blockchain project in the world right now. BSN is China's national blockchain infrastructure initiative. So it's not a blockchain, it's a cloud infrastructure that basically governs China's kind of blockchain environment. So obviously public chain crypto has been banned and restricted in China. It's still legal to hold crypto, but you can't, operate a business with it. You can't really do much trading on it. And probably eventually it'll become even more restricted. So they basically, wiped out public crypto in China, and it's not going to be coming back anytime soon. But just like they did with the internet, they have basically instantiated their own version of what this looks like, and that's what BSN is. So BSN has credibility because it's a network, it's not a company, but that network is governed by China Mobile, China's largest telecom, China UnionPay, China's largest payment provider, the State Information Center, which is an arm of the NDRC, and the NDRC is China's largest ministry, also responsible for government technology, government IT, and then Red Date. And so we actually co-led the last round for Red Date. We co-led it with Saudi Aramco. So there's a lot of interest in kind of what's going on here. And BSN is basically a layer 0 platform where permissioned versions of public chains can be launched and completely compliantly, completely legally, and completely openly operate. So public Ethereum is kind of restricted in China, but this permission version of Ethereum is completely okay. Now, what's the difference between a permission chain and public chain? Well, permission chains have a couple key tweaks. One is that they have to be whitelisted nodes, so it's not decentralized in terms of the network. Two, they've removed the idea of a free floating token, and that's the most important thing. So there's no free floating token. There is a token on each of these, on like this permissioned Ethereum, but you can't trade it. All you can do is use it to pay the network for gas. So it's basically like a credit to top up in order to operate. So what that means is that you have this whole ecosystem, not just Ethereum, I think permissions, EOS, permission Neo, permission Cosmos, and then more and more chains. You basically have an ecosystem where it's all technology and no crypto. So semi-decentralized ledger technology, but without cryptocurrency at the layer one, it was actually quite interesting because it's exactly as we talked about, right? When you remove the cryptocurrency and you remove the speculation and you remove all that kind of retail, all you're left with is utility. Like it's either be useful so that people will pay for the service you're offering or die. There's no kind of buffer for speculation. And so I think that actually, ironically, China will end up incubating an ecosystem of real utility kind of based and utility proven out blockchain companies. Now they're permissioned, which is just the way that China is going. But I think it's going to be quite an exciting, and basically if you want to be inside of China, this is the only real route for blockchain and developers. Now, the other thing, which is as a proof point, again, it's not apples to apples because BSN is an ecosystem of chains, but BSN last week exceeded Ethereum in terms of total number of transactions across the network. So it's growing very, very quickly. And they also have something called DDCs, distributed digital certificates, which is China's version of NFTs. And so these are completely compliant, permissioned NFTs. Like if there's non-compliant content, they will be taken down. Obviously, it's China. But there have been over 10 million of these digital assets minted just in the past kind of couple months. And so these minting counts are going up and up and up. And so I think China is actually going to be quite a vibrant ecosystem. And even the Hong Kong government has selected BSN to anchor its blockchain infrastructure. So there's a lot of really interesting stuff. The second half, that's all inside of China. Outside of China, and this is why we're coming to the Middle East on a roadshow, is something called the Spartan Network. So this is also built by Red Date, but it has no relationship to the Chinese state-owned enterprise or government. And Spartan Network is a really controversial but super interesting proposition. It's open source, it's fully decentralized, fully anonymous blockchain ecosystem. So again, like a layer zero, you can have multiple multiple chains inside, not permissioned, fully decentralized, but with the cryptocurrency removed from layer one. So it's Ethereum without Ether at layer one. It's Cosmos without the coin at layer one. So it's a whole ecosystem of layer one chains, but which don't require, enterprise or government or sovereigns or any kind of business. It doesn't obligate them to own, transact, or build in cryptocurrency at the base layer. And that's been a huge, I think, kind of friction for bringing in mainstream, because a lot of companies just can't deal with cryptocurrency because of the price volatility, because of the hacking risk, because of the counting irregularities, and also the fact that from a regulatory standpoint, it looks like the SEC is becoming even more conservative in terms of how it interprets utility coins as securities. So the idea of removing it from layer one and pushing it to layer two means that you can actually have functionality at layer one with enterprise and sovereign without actually requiring the crypto. So that's what Spartan Network is. We think it answers a lot of questions, and it's an alternative. It's not a replacement for public crypto, but we think it's a pretty interesting, and if you believe in this hybrid thesis, it's probably what a lot of enterprise would actually prefer to use rather than building critical, industrial infrastructure on a chain with a cryptocurrency. But that's just our view.
Someone's asking, is there a way to get access to the how do you get exposure to BSN?
Exposure from what view?
I imagine from an investing perspective, is it possible?
No, I mean, at this point, I just put a video which explains the Spartan Network. There was a summit. You can take a look at that. That's a really good explanation. It's this whole idea of public IT infrastructure. It's less about chains or no chains. It's just about, what does public blockchain utility look like in the future?
Okay.
I mean, again, like I'm talking my own book, right? But BSN is not a company, so you can't invest in it. There's no token, so you can't invest in it. Kenetic are shareholders, but we're not we don't raise money. We do have a company called Neptune. So Neptune is a Hong Kong-based company, which we are the majority shareholders in, which operates the version of Ethereum inside of China. It's called Wuhan Chain. So it's the official version of Ethereum. Again, this has no relationship to the Ethereum Foundation. This is not official based on Ethereum. It's actually official based on BSN. So, I mean, we will be doing a fundraise for that. That would be the only way I can see. But really, you want to be able to invest in the ecosystem of companies that are building on top of it, building inside of the BSN. So it's very different, right? I mean, people are asking, how do I get access to the network? And actually, it's slightly more traditional. You can't get access to the protocol. You have to invest in the companies that actually create value inside. Red Date, I guess, eventually we'll do another round, but it's really only for like super strategics. Their investors are like banks and Aramco. So it's retail doesn't really have access to that. I mean, hypothetically, maybe we could do like an SPV, but I don't think they would do it.
Okay, if I can just bring us back to sort of more generalized theme, just going to some of the other questions, right? I'm getting a question here saying that which do you think are going to be the top 5 coins aside from Bitcoin and Ethereum that will survive this bear market and thrive in the next cycle? I mean, some of these persons are saying Near or Solana or
Again, this isn't investment advice. I would tell you what I like. I mean, generally, I like top 10. And it's just from a kind of a safety and momentum and kind of liquidity type of approach. It's less risky because you have the liquidity there. I think that coins like Helium, like we're super interested in the Helium ecosystem and we've invested in Helium infrastructure. You can ping me if you want to learn more about that. But I think any of these coins that have fundamental value and use case, meaning distributed resources like Helium or Render or Filecoin to an example, like these are just good use cases. Like it's very clear the value, the value chain. That's not to say that the coins will do well, because again, at the moment, value is still divorced from coin price because there's so many other factors which go into it. But if you're taking, again, like a 5-year fundamental view, then I would look at large cap, top 10, and then I would look at coins that have fundamental use cases like Helium, like Render, like, Filecoin to some extent, and things that it's really clear who would use this, why, and what the advantages are, and then, some type of viable path to adoption.
Okay. Another question focused around Web3 and Web2. Firstly, which Web3 ecosystems have the most usage and traction? And then secondly, to add on to that, which of the Web2 companies do you think will lead the charge into Web3?
I mean, it's hard to say, right? Because everybody's kind of vying for 10th place. Obviously you have Ethereum, which is kind of the top. And then everybody else is kind of, trying to find their rhythm. That's why Solana, even though it's like a top 5, top 10 coin, they're resorting to things like hardware to try and onboard, right? There was a phase earlier this year and last year, where these large protocols like the Avalanches, the Polygons, et cetera, were just like throwing money to anybody who would take it, who could guarantee 1 million plus users. So they were just giving grants left and right. So they're trying to buy adoption and market share, which I think didn't really work yet. Maybe in the long term it will. So yeah, I mean, I just think that it's tough. I would say that from what was the second part of your question?
Which ones of the Web2 companies would lead the charge into Web3?
It's the biggest ones. It's the biggest ones, right? I mean, Like we see a lot of things happening with like Shopify, Salesforce, all of these massive companies, like they're making huge pushes into the space. I don't think anybody's going to lead it. I think it will be a wave. And again, this goes into exactly as I'm saying, like these guys are not going to be doing pure decentralized plays. Like no way is Salesforce going to be, in my mind, is going to be, kind of building 100% on a chain. It's going to be a mix of centralized ecosystems plus decentralized tools, right? So they'll do NFTs, but their backend is going to be all centralized in version 1. So this is why we see like this hybrid. This is where you can look to. I mean, if you want to take a more conservative view on it, like there's an argument to be made that you should invest in, like what could decentralization or what could digital assets do for Shopify? Like what does a fully expressed market do for like Shopify stock? It's pretty interesting, actually. If you really believe in kind of the size in the market size of what digital assets are, that's great. So yeah, I mean, I think it's across the board, but I don't think there's any one company that's going to kind of lead it. I think everybody's in it, like Nike, Adidas, all retail, obviously all kind of finance, they're all coming in.
Okay.
It's not going to look like, don't look for like the pure Web3, pure decentralized model for signs of life. Look towards the hybrid, and that's your canary for kind of real adoption.
Okay, I've got another question that's actually come into me on WhatsApp on the side, right? About the VC funds you mentioned earlier. Given the marks that the likes of Tiger Global, etc., are going to have to go through, the markdowns and valuations are going to have to go through. Now, I imagine crypto is not advanced in that purpose because there's not that many publicly sort of financial, fiduciary, companies, like Fidelity or people like that invested in some of the, smaller crypto projects. Now, if these marks are going to be way lower than where they're probably marked in the VC's books, wouldn't anyone entering VC funds at this stage be entering at a way too high a level? And if you understand, was the question clear?
Sorry, I don't quite understand.
Yeah. Okay. So at the moment, in the sort of PE venture capital space in TradFi, there's this huge question around where the marks in private funds should be on the valuations of companies. And a lot of people are arguing the real marks for these are actually way lower than where the hedge funds are actually marking them and the VCs are actually marking them. Okay. Now, wouldn't that also apply to the crypto funds, crypto VC funds, that the real valuation of the companies that they're holding is actually a lot lower? And where is that process in crypto at the moment with the funds?
I mean, it depends on whether it's token or equity, right? I mean, I guess for token, like it's clear, right? People have kind of published their NAV, but for equity, it's harder to say because unless you see, these types of like lower valuations, you don't see until there's actually a mark, like a new round. So it's a bit kind of more opaque. But that's why these are structured as like 7-year, venture funds are structured as like 7-year plus funds. Where are we in the process? I mean, I think that most of the process for portfolio companies has been to just cut burn. If they accelerate the raise process, but I think it's just kind of batten down the hatches. But previously it was kind of raise while you can. And then the next phase is just, put your head down, build, and make sure you can survive for the next, at least 12 months, probably 24 months, because the fundraising ecosystem, the fundraising kind of scenario is going to be adverse, for the next, 12 months at least. And so if you can come out the other side and then raise, that's best. But yeah, for sure, we're still kind of marking things down at the moment. We're seeing valuations cut, obviously down rounds, but it's not. But again, it's not just Web3, right? Look at Klarna, 45 to everywhere. I mean, it's everywhere. It's not just crypto.
Yeah, that's why I think this was all I was asking.
Yeah,
the same.
And guys, I apologize in advance. I have another call in 2 minutes. So if there's any last kind of questions or whatever, maybe I can try to find a way to kind of answer them after the fact. Maybe Aaron, you can kind of collect some of these questions and I'll maybe throw them into.
Arun, do you want to close up?
Oh, sure. Well, thanks so much, Jehan. That was a really, I mean, for someone like me who's a bit of a neutral, it's really triggered my imagination of what could come and what's we're going to expect in the next coming months. Yeah, Srikesh, if you want to just say a couple of last words, and then we'll close shop.
No, look, thanks very much, Jehan. Great pleasure interviewing you. Glad to have the opportunity to do this. I hope that the audience found it useful. We try to keep it, general as well. So I hope it was useful to the audience. Billy, anything final to say?
No, Jehan, I was awesome as always. I think the market is going to be tough, but we always make higher highs and lower higher lows, I guess, as we move forward. So we're looking forward to the next bull run. And I think guys, they're really interesting about what Jehan does, and I think it really sets him apart from a lot of other crypto VCs. Is he's a builder of companies as well as an investor. So my suspicion is he's going to be building some really interesting companies over the next couple of years. So we want to keep an eye on.
I appreciate that.
I appreciate the candid answers. Very candid answers. Appreciate that.
Yeah, and again, take it all with a grain of salt. We could be wrong, but I think that in the long term, the market is tough but fair.
Understood.
Perfect.
Thanks so much, guys. Appreciate it. Thanks for your time.
Thanks, guys.
Thanks so much.
Much appreciated.
Thanks so much.
Cheers.
Bye.